Congratulations! You found the Pirls Stock Market Commentary for market week ending Friday, January 16th, 2015. Market breadth. With this past week's market decline, our bull-bear point and figure ratio fell from 0.83 to 0.65, dropping further into bearish territory. The total count of securities in bullish or bearish patterns rose 5% to 2,550. The count of bearish stocks increased 16%, while the count of stocks in bullish patterns decreased 9%. The Pirls PNF Market Breadth Summary Chart shows us a market now 2 consecutive weeks in bearish territory. Paid subscribers have access to the OpenOffice Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking on the Membership tab, and clicking Sign Up. For those who are interested, a free 2-week trial subscription is available. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 151 points for the 8th decline in 13 weeks. At a negative 84.40 points, it continues below all 9 tops above plus 100 and above all 6 bottoms below minus 100 in the last 3 years. Market Gauge Volume Analysis. In this week's volume analysis, all indexes ended in neither accumulation nor distribution mode. In the last 2 weeks, the Nasdaq 100 Trust had 0 accumulation days and 0 distribution days. Of the other indexes, both the Diamonds Trust and the S&P 500 Deposit Receipts ended in neither accumulation nor distribution mode. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week also, the Nasdaq 100 Trust ended in neither accumulation nor distribution mode. Momentum. On Friday, 1/16, the CCI 20 Daily had 6 consecutive days below zero to begin a Woody's downtrend. At minus 114.49, it is outside the plus or minus 50 range for a valid zero-line reject entry signal. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 27 weeks ago, while the daily CCI 20 began a Woody's downtrend this past week. Declining further from last week at positive 26.73, the CCI 20 weekly remains in a Woody's uptrend, continuing within the plus or minus 50 range for a valid zero-line reject long entry signal should the CCI 20 weekly move upward next week. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 are negative. Bullish, REITs continues in the top 5. Oil services continues in the bottom 5. Bearish, banks and brokers continue in the bottom 5. Disk drives and networkers have entered the bottom 5. Gold and silver continues to lead the top 5. S&P retail has left the top 5. Oil has left the bottom 5. Focus this week. The big financial event this week was the unexpected Swiss National Bank depeg of the Swiss franc from the euro. There is much speculation as to the SNB's reason for this. The most interesting explanation we've found relies almost completely on technical analysis and indications that the SNB was short gold and needed to cover. From www.goldseek.com, quote, "I have a theory," end quote, are the following key points. I believe the SNB was massively short gold and dropped the peg to cover their short. Here is why I believe it. Background: September 6, 2011, the SNB instituted a peg to stop the franc from appreciating against the euro. On that day, the gold price topped. If you believe gold is a commodity and not a currency, stop reading. If you do believe gold is a currency, this is noteworthy. What we have established is there is some tie between gold and the SNB. It could be a function of a consortium of CB balance sheets, but the top in gold and the peg are connected. Fast forward to 2014, and we have the Swiss referendum where the Swiss equivalent of Yellen, Thomas Jordan, took to the pulpit claiming gold as a mistake. He was quickly backed up by a shrill, formerly of Citi, claiming gold is a 6,000-year bubble. Bottom line from all of this is the SNB did not want to buy gold. Even though the amount needed and time allowed were very reasonable, Jordan wanted none of it. Koos Jansen has done an amazing job in deciphering the physical flow of gold from west to east. In a recent piece, he noted that amount of gold that is imported into Switzerland, refined, and then exported. If any country knows about the flow of gold, it is Switzerland. They are the refining hub. Did the SNB look at the data and realize that the physical offtake was reaching levels where it could no longer be ignored? The chart below shows a period of 18 months where the price of gold denoted in francs went sideways. And it followed every other chart of gold and broke out convincingly. What happened next is a failure, and for gold, which is about as technical a trade as there is in the markets, this was rare, very rare. Is it unprecedented? It could very well be. It could all be one giant coincidence, but I don't believe it for a second. In my humble opinion, the SNB was short gold, and they needed to cover, and cover they did. Thank you for tuning in for this week's Sand to Pearls Stock Market Commentary, compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you have enjoyed a peaceful and pleasant weekend, that you're looking forward to a great week coming up, and wishing you true success.